Welcome back to the channel. Welcome back to another episode. I am, all right, the camera's perfect. Okay, cool. Welcome back, you guys. Hope everybody is doing well. I am putting together another series. So if you just saw, I just recently posted a series to your journey to financial freedom. And I went over 4 main topics: determining your fire number, debt snowball versus debt avalanche, how to invest your first $1,000, and then the journey to building wealth. So I'm going to link that playlist down below. If you're interested in that journey, take a look at that. It's basically a 4-step process that I went through myself as well as with my wife in order to get ourselves financially free and get ourselves en route to becoming financially free. So I want to share that information and that content with you via that 4-part series. This next series, because of that series, started me thinking about what else, what other information and content can I provide to you. And so I wanted to go through, this is going to take a little bit longer. I'm not going to drop all 11 plus 4, 5, all 16 ETFs all at one time, but I'm going to share with you the 16 ETFs that we have in our portfolio. 11 of them are in our buy and hold portfolio, and then another 5 are in our growth portfolio. And so today is the first position that we have in our buy and hold portfolio, as well as this is our largest position. I'm probably going to go in order of size with this, so you can expect over the next week or so I'm going to be producing all of these videos on the different ETFs that we own, why we own them, and I just kind of want to share with you some of the thought pattern and whatnot that we have regarding the ETFs that we own. So the first one is SMH. It is actually a sleeper. I didn't expect it to do this well because it is our largest ETF, and that is because of growth, not because of dollars put into it. So it has done very well for us over this last year, and I did have an idea that it was definitely going to be on the offense side of our portfolio, and I'll break that down a little bit more. I have all of these analogies for everything in my life, so as you begin to watch the videos and the content, you'll start seeing me kind of share with these analogies. But in our portfolio, it was already on the offensive side, but it is being a star athlete in our portfolio, and we are very proud of the growth and of the production that SMH has done over this last year, and we expect it to continue moving forward. So let's not waste no time. Let's get right into why we are invested in SMH. So SMH is a VanEck ETF, and SMH is basically an ETF regarding all of the semiconductors. Semiconductors, if you aren't familiar with, semiconductor chips are in pretty much every piece of technology that you touch. Computers, TVs, vehicles, energy grids. I mean, anything with technology, a semiconductor has a role in it, whether it's just storing data, whether it's processing data, it's just kind of ridiculous as to the amount of content content's not the right word, but the amount of responsibility that semiconductors hold in our industry as we continue to push towards this technology, a world that we live in. And so I wanted to have some type of exposure in semiconductors. There is a couple of semiconductor ETFs. We decided to go with SMH just merely based off of the previous track record. So looking at the other ones, and I don't recall those off the top of my head because I began purchasing SMH at the beginning of last year, so January 2021, and have basically been purchasing month over month since then. We originally put $8,000 into SMH in January, and then have been doing about $300 a month and or about 1 share, because all of the good part of last year, SMH was about $200 or so dollars. Up to now, currently, if you're looking at it in the middle of January 2022, it's about $300 currently. And so we basically been buying 1 share a month. outside of the $8,000 that we originally put in at the beginning of the year. I'll pull up our spreadsheet and kind of see what our dollar cost average is, but I'm expecting it's somewhere probably around 230, 240 for this particular ETF. And again, it has done well for us. I want to say we're north of 30%, definitely 25%, depending on the recent kind of pullback that we had, because it actually had ran up to about 320. But it's a great ETF for us. It has a very good expense ratio for the amount of growth that it produces. The expense ratio is 0.35. Some of the bigger ones, we own ARC. You'll see our cannabis ETF. They're 0.75. If you're not familiar with an expense ratio is basically the amount of fees you pay to the management company for putting together that ETF. So how you can think of it, for every $10,000 that you have invested in an ETF, in this case 0.35, so $35 of that $10,000 per year goes to that management company for managing the ETF. Now, it is nothing that you have to do. You're not sending a separate check. You're not doing anything in order to pay that. How they based off of the share price, at the end of the day, it kind of reallocates and pulls out some money, and that's how they do it. But it's nothing on your end that you have to do. Once you invest into the particular ETF, you handle all the fees that you have to pay, and then, like I said, it's 0.35% on an annual basis. So for every $10,000 that you have invested in this particular ETF, you would pay them $35 a year to manage that ETF. So in my eyes, I'm totally fine with this expense ratio. I do have particular ETFs that are a little bit higher, as well as I have some that are a little bit lower. But again, totally fine with that. But as you can see here, I got a couple examples. But they're computers, appliances, I forgot that, medical equipment. So again, wherever there's technology, there is a chip that is processing that information, processing that data, allowing those mechanics of that equipment to move in some form or fashion because of that semiconductor chip. So semiconductor chips are all around us, and I want it to be in an industry that we are going towards, that is growing, that is getting more faster and more efficient, because again, that just allows us, for our buy and hold portfolio, to continue to invest in something that we know is still going to be around in 15, 20 years. This is a career hold for us. This is not something that we want to be in for 5 years, 2 years, come out of it and make a couple, make a single, make a double on it. This is something we want to be in, like a Warren Buffett style, so that when we look back at 2020, we said we've been in this for the last 20 years, and our average cost basis is at, $400, and it's pushing around $2,000 or something like that. So that's why we like SMH. A couple other notes regarding SMH. I want to give you some of the major holdings. So Taiwan Semiconductor Company is one of the major ones. Qualcomm, NVIDIA, Intel, you probably are pretty familiar with those names if you're invested in the stock market. AMD, Texas Instruments, Advanced Medical Devices is AMD. So these are all companies that are the top 10 within SMH. I don't recall off the top of my head what the top 10 makes percentage-wise of the portfolio, but again, it has done quite well for us. I don't believe there's many holdings in there. I definitely believe there's under 100 companies within the one ETF that is in there. So that does mean that it's a little bit of a smaller ETF in the sense of holding and the amount of positions that ETF holds. And so the role that SMH plays in our portfolio, and what I was thinking prior to even having any knowledge, so this is back in January of 2021, was I saw this being an industry that was going to continue to grow. So I knew that it was definitely going to play an offensive role in our portfolio. So let me talk real quick about that. How I look at our portfolio, I kind of look at it as a soccer field. If you're familiar with soccer, you have your offense, you have your defense, and then you have your goalie. And so kind of each layer plays a different role. The offense folks are supposed to really produce over and beyond what they need to do. Defense is just supposed to hold steady. So our defense is somewhere between 10 to 15% on an annual basis. That's what I want our defense to do. And then our goalie per se is more or less our dividend play / that 8 to 10% that guaranteed return. However, they're not going to really produce major returns. They're just not going to allow us to go into the negative. So our offensive players are going to be that north of 18%, north of 15% on an annual basis, compounded year over year over a long period of time. I want to throw that in there because 1 year might not be as well, even though we did see 30+% in SMH last year. That doesn't mean that we're going to get that year over year, but definitely something that is going to be north of 15, 18% on an annual basis. Defense is going to play somewhere between that 12 to 18% there, and then our goalie positions, or the positions that are allocated to that goalie position, are going to do somewhere around that 10% with dividends and things of that nature, just to allow our portfolio to continue growing and moving forward in years where there's a little bit more volatility and/or the returns just aren't as high for natural disasters, COVID, whatever the case may be. So this is definitely an offensive player. Again, so SMH, with it being semiconductors, the continued demand for products is always going to be there. Not to mention when you factor in additional issues such as the supply chain issues that we were going through, COVID issues, shutting down factories. There's a numerous amount of issues. If you heard about the vehicles and there being a short supply of vehicles out on the market just due to semiconductor shortages, this is all pumping up and continuing that need for semiconductors in our marketplace, and that is a good sign for investors investing in semiconductors, because that means that your companies have that demand for the products that they are producing. Another good example that I wanted to bring to you, this happened a little bit, I want to say maybe third quarter of last year, especially with Intel. Is the United States government, because a lot of the semiconductors chips are being produced outside of the United States, outside of our borders, where the government is wanting to, the United States government is wanting to build a semiconductor plant within the United States to help remove some of that burden that we have on companies outside of our borders. So that is a great thing, because the amount of dollars it's going to take to produce that factory, not to mention the factory isn't going to be viable for another 2 to 5 years. That just shows how they're trying to build something now. The demand is still going to be there in 10 plus years if it's going to take 2 to 5 years just to produce the plant in order to make those semiconductors. So again, for investors getting in, that just allows you, and that just shows me that there's a lot of runway left on the semiconductor train, and so that this is not something, or this is not a fad that is going to be gone in 5 years, and then I got to move this money from one position to another position. I like to be invested, especially in the buy and hold portfolio, in something that I can, be almost career investors in. So that's something I can be in for 30 plus years, and know that my money is still going to grow and still going to be around in the next 20 to 30 years. With the metaverse talks coming out, things of that nature, all of this stuff is going to be made possible by semiconductors. So this is, again, it didn't start off. It's not one of our largest positions via dollars into. Again, we put that $8,000 in, and then we have been doing about $300 ever since. I want to say we're somewhere around 11,000. Let me actually pull up the spreadsheet, and we don't even have to lie to each other regarding how much we have in. So these figures are based off of December of 2021. I have not updated it. I only update the spreadsheet at the end of each month. So with us being in the middle of January, I have not updated it for January. But at the end of December of 2021 last year, we had $11,500 invested into it. The value at that time was around $15,000. Our cost basis was at $2.30, and we had 50 shares of this particular ETF. And this also gives you a little bit of a glimpse as to our whole portfolio as of this month, because we have made the purchases for all 11 ETFs. All of these ETFs here have been purchased and are now owned by our portfolio and is within our buy and hold portfolio. And so these 11 as well as these 5 are going to be videos coming up here in the near future that are going to be discussing the 16 different ETFs we have in our portfolio and why we own all of these position. So look out for that information. I look forward to seeing you at another video, and thank you so much for reviewing and listening to the content that I have to provide. Please hit that subscribe button and look forward to seeing you at the next video. Talk to you soon.